Hi, this is Editor's Take. I'm Sakshi Batra and with me is Govt. Chaudhary, is the Deputy Executive Editor of Moneycontrol, and we are going to be discussing about how the cut in corporate taxes is likely to have an impact on demand scenario of the country. Thanks a lot, Gaurav, for joining in. Now, we do know that the cut in corporate taxes bodes well for India Inc. and also is set to improve their earnings and profitability. But how exactly will this have an impact on demand?
So that is the big question that everyone is asking, and this is what the government has done is actually dealt with the supply side of the problem, which is what the corporate side is. Essentially what it has meant is that it has brought down the tax outgo of companies. And what it also means is that what it implies is that the companies, the profitability margins of companies will improve significantly,
Right.
And also for new companies that will get even better. The government is hoping that once the profitability margins of companies improve and they achieve break-even faster than before, then they will be able to pass on those some of those benefits to consumers in the form of lower product and service prices. But the big question remains whether lower product and service prices, as and when they happen, it may not happen immediately. We have seen in the case of car companies that the product prices have not come down significantly despite the tax rate cuts. And likewise for many other consumer goods sectors as well. But the big thing here is, the big question here is to what extent will consumers start buying more goods? To what extent will goods actually start flying off shop shelves at far greater rapidity than it is happening now? The big problem that Indian economy currently is facing is that people are buying fewer goods. And we have to find out a way of prompting people to spend. That spending is not happening because one, people feel the current income is not appropriate enough to stoke a kind of spending that the government or the economy actually needs for revival in the broader economy. And two, there is a bit of a consumer confidence crisis that is currently afflicting the economy. That is, most of the goods that are bought on loans, say for instance in a car or expensive consumer durables, these are spent over a period of 5 year over a 5-year period, as these are mostly financed through loans to consumer. At this point in time, there is a crisis in this confidence, to the extent that consumers are not feeling confident about their ability to finance a car or a consumer durable buy over a 5-year period.
Yeah, actually, Gaurav, you're right, because till the time more money gets into the hands of consumers, they may not end up coming to the shops and shopping more things off the shelves. But do you think the impact will also vary, because each company will have different plans of using this extra profit that they will have because of the cut in taxes? Either somebody will want to invest more, or somebody would want to cut the debt which is on their current books, and only some will be willing to actually pass them on immediately as benefit to the consumer.
See, one of the surest ways to revive an economy is to give more money in the hands of people to spend. And unless that happens, the buoyancy in spending will likely continue to elude the Indian economy for a revival in the broader sense to take place. So there is a lot of speculation that is now building up whether the government is actually going to go ahead and do what it with individual income taxes in a manner similar to what we did with corporate income taxes. As we know, government in a very pleasantly surprising move actually decided to cut corporate income taxes, bringing down the effective rate to 25.17 from about 30%, and also for new companies that's even lower. It's about 17% on a net effective basis. And the government went ahead and did this and brought about changes in income tax rates of corporates through an ordinance, which is not usual. It's extremely unusual. There is now heightened speculation, in fact, that the government will go ahead and do something with individual income taxes as well, just to boost spending and also to boost confidence among consumers. And we now know that the Direct Taxes Committee, Code Committee, which essentially the panel that looked into reforms of direct taxes, has also recommended an overhaul of the existing slabs and rates. If all those come about midway and the government does not wait for the budget that is going to be presented in February 2020 and does it much before that, like in the manner that it did for corporate income taxes, that's going to give a big boost to consumer sentiment, and also for the salaried class, which will effectively have more in their pockets than they do now.
Right. So, which sectors, according to you, will see most or maximum improved demand?
It all depends on to what extent the government actually goes ahead and do it. Although there is speculation that the government might do it just before Diwali, nobody knows yet. It may not do it, for all you know. It might just go ahead and announce its intent to reform, the individual income taxes and bring about changes of a similar nature that it did in the corporate income tax on the corporate income tax side. In any case, I do not expect the income tax changes on the individual level for individuals to come about in the next 2 to 3 weeks, because Maharashtra and Haryana elections have been notified. Elections will take place on October 21, and the model code of conduct is in place. So we don't expect the government to actually make big changes in individual income taxes, because it could violate the model code of conduct. But if it comes even after that, it remains to be seen whether it comes to an ordinance or whether the government actually announces its intent to bring it through in the coming winter session, or maybe even in the budget session. But coming to the question of which are the sectors that are going to benefit the most if this comes, clearly the consumer goods sector, the automobile sector, and the consumer durable sector, because people will be a large part of the money that the government, that individuals will earn through changes in income tax, which is going to give them more money in their hands or raise disposable incomes, is going to be spent on discretionary spending, and I would expect people eating out spending to go up once if these changes come through. Car buying is obviously going to be one of the biggest beneficiaries, as well as consumer durables industry.
Absolutely. Thanks a lot, Gaurav, for sharing all that insight. Well, all eyes are now on the government to really see if the government will give in to the demands right now, and for the economy right now, which is facing weak demand scenario and a slowdown. And to buck up that, will it actually make changes in the income taxes or the individual income taxes, which might in turn increase the demand for goods, consumer durables, autos, and for FMCG goods as well. Thanks a lot for joining us in this edition of Editor's Take, and do stay logged on to moneycontrol.com for more news and updates. Thanks for watching.